Hi, everybody. How's it going? We thought we'd do karaoke, but I think that'd be too embarrassing, so I'll just invite the panelists up to actually do a proper conversation. All right. I wonder if the Romans held conferences in Londinium about financial trade across the channel, perhaps. They tokenize the tin trade. All right. Well, listen, my name is Peter Neufeld. I do a lot of work at the firm globally around financial services, specifically looking at how consumers think about and live their financial lives and how we in financial services organizations support them. So this panel, we're really going to talk about how this tech innovation of AI is creating extraordinary opportunities for people to live richer, more meaningful financial lives. We're living in a post-Turing test imitation game winning world. These discursive interfaces can do things when we ask them questions that seem magical, that seem highly accurate and believable. And consumers every day are using them to solve very complex problems and sometimes find them better at doing that than interacting with other humans. And I think research we've recently done in our global AI sentiment survey shows that when we talk to consumers globally, almost 90% are open to using and do use these technologies to help them make meaningful financial choices and decisions for themselves, their families, their businesses, things that really matter in their lives. But less than 20% would be open to letting them act autonomously on their behalf. There's still a bit of they haven't had that first ride experience. For those of you who maybe have taken a Waymo, if you talk to consumers before they've taken an autonomous vehicle, they're anchoring on concern and worry. What if it breaks down? What if it gets lost? But then they download the app, they order the car, they've got their initials on the top of it. They get inside, they can hook up their Spotify playlist. They get dropped off at their mother-in-law's house. They hop out, and they're like, wow, that was impressive. Can it pick up the kids on the school run? Can it pick up my mate and we can go to work together? Does it have Wi-Fi? They start anchoring on possibility. The first ride experience creates trust. An exceptional experience creates trust. And it's not for nothing that Waymo chose to use Jaguar as the brand for their vehicles, right? So it's not the Uber driver with the Hyundai. This is something special. This is something unique. But when we look into financial services, there's still a bit of a trust paradox. There's still a bit of an opportunity. I'm excited about this panel because we've got some people here who are really helping us innovate in this area and go from AI to AX and really, look between that gap of the discovery, comfort, and execution hesitation and how customer behavior is evolving. And maybe I'm going to ask our first panelist to respond here. So Dee, who's from Sierra, and I'm excited about what Dee does and what Sierra does, because I think they're really at the cutting edge of helping us understand and break through some of the mythologies of how consumers are actually using these tools today. So maybe Dee, you can give us some insight into that.
Sure. Hi, my name is Dee Byrne. I'm the head of sales at Sierra, and what we do is we help to provide AI agents to improve customer experience. We specialize in companies that are highly regulated to help customers solve really kind of complex issues. And I think, like when we were talking earlier, Peter, what is really exciting is that we're seeing customers not just using the traditional kind of what they saw previously. We saw chat as a kind of like a chat bot, but we're seeing our customers solve really, really complex kind of high stakes challenges by using AI. If we take one of our customers in the US, for example, Rocket Mortgages, they're really across chat and voice, they're helping customers to, from that initial kind of like curiosity stage of, potentially I'm interested in this particular house, can I get a mortgage, right through to pre-approval stage. So they're helping to really speed up all of that tedious kind of journey that you usually go on in order to get a pre-approval for a mortgage. And the numbers are really speaking for themselves. So customers who are going on that journey are seeing like a 3x increase in conversion rates. And then when they also hand over, if we want to keep that human in the loop, when they hand over and they speak then to a banker, we're seeing like some 4x improvement or increase. And I think what's particularly exciting is the fact that with the chat and with voice across both of those channels, Rocket Mortgages are able to handle over 800,000 hours of customer interactions and also place about 100 100,000 outbound calls as well. So something they simply wouldn't have been able to achieve had they solely had to rely on their human agents.
Those are extraordinary numbers. Just a quick question to the audience by show of hands. If you were remortgaging or buying a home tomorrow, would you let a chatbot do the mortgage for you? Raise your hand if you'd be willing to do that, just out of curiosity. So about 50%. How about absolutely no way, not in your life? All right, a few people. Okay, interesting, isn't it? We're changing, we're evolving. And I think what's interesting, a lot of this requires access into data markets. We got open banking, open finance, credit decisioning. If you want to get to that 3x, 4x result, you're going to have to be looped into that in a safe and meaningful way. And I know, Tom, at ClearScore, you guys are doing a lot in the agentic credit broker flow that's going to really enable this future. I wonder if you could share a little bit with the audience.
Yeah, sure. Hi all. So I'm Tom Markham, Chief Commercial Officer for the ClearScore Group. For those of you that aren't aware of ClearScore, we're a financial services platform, operates across 4 continents, 26 million users now, just 10 years old. And I think, and following on really from Dee's points, we are increasingly seeing consumers start their financial journeys in some of these conversational AI tools. The challenge really is that the experience they're getting is very disjointed. They're moving from the kind of easy to interact with conversational tool into something that is, a financial services application, which is very regulated, very structured, audited, etc. And those two experiences tend to be very disjointed. And so for that reason, we've recently launched the Agentic Credit Broking Protocol. This is something that is going to be, it is open source, designed to operate across the globe. And really, that's the problem that we're trying to solve here, which is to create more structured journeys and to build that trust and control in an experience that can still operate within those conversational AI tools. And so it's about building, putting in place the roles and responsibilities that build that trust. Having stage gates along the way to make sure that the areas that need to be regulated and consistent are, but still maintaining the benefit that you get from some of those conversational AI tools. We've had huge response back from lenders, and it's an area that we think is only going to get more important over the coming years.
I think that's really amazing, and I think when we talk to clients who are going through this process, there's a lot about how do we ensure that these agentic agents that are helping us make some of these decisions are making consistent and reliable and good decisions as we go through that. And I know that's a big part as well, Kirsty, that you're looking at Zilch, because as we're doing this and as we're opening and widening access to supporting more people to get access to financial capability, build financial well-being, and build personal prosperity, we've also got to make sure that we're generating really good outcomes for them. And we've got to make sure that we're helping them make great financial choices and decisions. Maybe you can talk a bit about how you guys
so hi everybody, I'm Kirsty. I'm Chief Marketing Officer at Zilch. We are an intelligent payments platform. We provide our customers with smart ways to pay through credit and through debit. I think the point that you're making, Peter, about AI, tech advancements, really lowering the water level, and opening up financial services to a broader population of people. Building on what Tom was talking about, what ClearScore Group are doing. Love your work, by the way. What the ClearScore Group are doing, which is to democratize access to lending products, and you've been doing that for 10 years now. That really does enable access, more products to more people, better products to better people. And as a lender, we've benefited from that. It enables us to be able to give access to affordable borrowing products to much more of the population. So where we're headed is brilliant. That same sort of set of data, that same AI, that automation technology that enables us to do that also enables people like us at Zilch to really understand and be able to personalize the experience in life for our customers. So we know an awful lot about them based upon the data that we have and based upon a lot of the sort of automation models that we run in the background. What that means is that we have a big influence over where a customer spends, how much they spend, and when they spend. And that's interesting, and it's obviously a huge benefit to us, but the problem is that is a huge amount of power to be in our hands. And with great power comes responsibility. I promised myself I wouldn't use that line, but I've done it now. But with that power of accessibility and with the power of personalisation, we have to also look at it through the lens of responsibility. We are in a regulated, highly regulated, operating within a highly regulated environment. So we care deeply about that at Zilch. It's the cornerstone of who we are, and we lean into it. So what I mean by that is, like any good lender, like any responsible lender, we will do rigorous affordability checks very early in the customer's journey when they onboard with us. But we don't just leave it at that point. What we do is we do regular in-life affordability checks, continuously using multiple sources of data, not just bureau data, open banking data, behavioral data, sometimes psychometric-based data. We're looking at a whole load of things to help us to understand that customer's position, so that in their life we're able to increase or reduce limits based upon their affordability. We're able to open up access to some products or reduce them. So we are permanently in a cycle of, making sure that power of giving access and that power of personalisation is done, responsibly. So I think, our lens is that, AI definitely, raises the bar, opens up the access and opens up personalisation, but we have to do it through the lens of responsible.
I like that, the power of personalization, because a lot of what we talk about when we talk about what AI enables us to do with data is how do we get to another level of personalization? How do we understand customers and their need states in a much more meaningful way so we can help them, again, make these extraordinary decisions almost independent of any human interaction in ways that are quite meaningful. And I know if we move across maybe to Tom from OakNorth, I know one of the things that you're able to specialize in that kind of complex B2B lending environment, financing the innovation economy, helping mid-sized business owners here in the UK and in other markets get access to financing. But these are sort of specialized relationships, specialized circumstances. How do you go about doing that, and how is AI changing the way you're able to provide better, more targeted support?
Yeah, thank you. Tom Harris here from OakNorth Bank. CTO. We've currently lent about £20 billion and created about 70,000 jobs through that process. It's all based on having high, rich quality data. And one of our core concepts is a more forward-looking projections. So looking at companies' actual accounts on a monthly basis, like you were saying, the constant credit analytics, working with the company owners to help them understand where their business is going. And so we've been doing that off of rich data sets previously using data science and ML. And what we're doing now is introducing more access to that data for our AI agents. For example, we've created our AI knowledge bank, which is an MCP layer that enables all of our staff to have access via Claude or ChatGPT. Also enables agents to run in a kind of Maltbook style conversational piece, which enables us to run kind of simulated kind of credit reviews, credit committees. So this is really unlocking like the speed of which we can make decisions on quite complex cases. So it's kind of augmented rather than automated is kind of our core concept that we're driving. Further to that, we also offer savings products, obviously as part of raising to lend. And we see a massive opportunity here in terms of servicing an underserviced market who fundamentally today can't get access to wealth management because less than £20,000 savings, £200,000 in savings generally doesn't get you independent financial advice. So this is a space where we feel like AI can really open up opportunities for advice as well.
I totally agree, and I think that really underserved market, when you have technology that gives you cost-effective capacity to access and provide financial capability, not only can you explore extraordinary profit potential, but you can create extraordinary prosperity. You can help people save better for retirement, make sounder decisions, get access to the advice and support they need to live that better life and to be a more active and productive member of society as a result. I think it's a really interesting area. And a lot of this hinges, like the personalization, the specialization, the access to data, it all, though, hinges, I think, really on trust. going back to that first ride experience, what is it that's going to help us trust this new technology in making decisions on our behalf and advising us in the choices that we're going to make. And part of that's going to be based on experience. And I know, Parveen, you have a perspective on this, both in the work you've done with Innovate Finance and beyond. So I'm really keen to kind of get your perspective on how we go about building trust.
Thanks, Peter. This is Parveen. Hope everyone's having a nice time. I am a non-executive director with Innovate Finance. And I think I attended a panel discussion this morning between Darren from MasterCard and Lou Smith. Trust was something that came up in that conversation as well. And just linking it back to that conversation, I think trust is one of the most important ingredients for anything to stick, be it in the professional or the personal life. I think AI agents need to work harder to build the trust vis-a-vis the humans. So when you look at some back office operations, when a human is processing something, we'd look at 90% accuracy rates, and we are quite happy with that. So the trust is built that the humans can process something at 90% accuracy, and that's the standard service level that we agree to. But when it comes to deploying agents, 97% accuracy is not good enough. We always strive for 99%. So I feel AI agents need to work harder to build that trust. And Peter's example earlier around autonomous cars, imagine how hard they had to work to first get that ride booked. To step into a driverless car needed far more courage and trust than when you book a car which has a human driving the car. So it's harder. So acceleration trust and maintenance trust for AI agents need to work harder to get that adoption rate. And adoption comes only when the consumer gets comfortable, confident, and trusts the solution to solve the problem or augment that workflow. In my day job, I've seen the various ways of building trust has been to try and create that traceability and auditable paths to be able to augment the human in the loop and almost give the confidence that I'm acting on behalf of you. The prompts are acting on behalf of the humans that created the prompts. And it's only through experience, pretty much like that car journey that Peter was talking about when you booked it for picking up the mother-in-law.
That was a hypothetical example.
Hypothetical, all right, but either way.
Anyone taking notes out there.
But whoever you picked up was besides the point, but the first journey, the first experience is really important. So my take on building trust through AI agents is embrace it and try and build all the citations and auditable trace which you need, whether it's a human in the loop or whether it's a fully human managed process or an AI agent managed process. You still need to create it, but that's the only way you can start adopting some of those solutions into your own workflows.
I like that. Ladies and gentlemen, you heard it here first. We're making AI work harder. I thought it was the other way around, actually, but I'm glad you brought that up. You brought up, I think when we talk about AI and AI customer experience, we talk often about this notion of having a human in the loop, this requirement for there to be a human actor in a process or an experience that the customer can pull in. But then there are some interesting sort of issues with that potentially, right? Like, humans can have biases, they can have bad days, they can be poorly informed, they can be inconsistent. They also aren't always available. They might also have other pressures upon them in terms of the questions you're asking. And I'm wondering, I know maybe I could start with you, Kirsty, on this one. As we begin, and I think we're still at a very early stage of how we're learning how to use these tools and how consumers are learning how to understand them. How do you foresee that evolving? How do you see that sort of movement between maybe a future where there are certain complex financial choices that I do exclusively in this arena, but there are others that I reserve for human interaction?
Yeah, and it's a good question. It's been referenced quite a lot throughout the whole day, actually. Sort of keep coming back to at what point does human intervention turn into automation? But obviously it's coming, right? Automated financial services is on its way. It's something that we can see and we're heading towards. But it's the benefits to the consumer and to the businesses is too big for us to ignore that. So it's definitely on its way. My view is that obviously it's not an overnight switch. And we talk again about, Peter, we talk about autonomous vehicles, and I like to liken, this journey to that one, which is, it's been a couple of decades that we've been adding autonomy into driving, right? Who remembers winding down a window? Now people are like, what is she talking about? That action, winding down a window. From electric windows, right through to much more recent evolution around, sat nav and parking. Parking support. I can't remember what the actual thing's called, but we welcome it, right? But it took years and years and years of trust, and we keep coming back to trust as well. Parveen said that. It takes years of trust. I'm not yet ready to get into a autonomous vehicle driving at 70 miles an hour on the motorway. Definitely not happy for my children to go in one of those, but I will be. I'll probably send my children in first. Off you go, test that, see if that works. But financial services, obviously we're on the same journey. I think it's going to be quicker. We're not going to spend decades and decades doing this and iterating. I think it's going to be much more, much faster. But it's heading this way. But it's an evolution. It's not a switch, I think is my point.
I like that. We'll have to cancel the Waymo then for the panelists after this. No, just kidding. And Dee, I think, again, I'm returning to Sierra because I just really do get excited about some of the things I see you guys working on, especially in the U.S., and you're right at the heart of this. You're right at the heart of helping large financial services organizations navigate trust, internal concern and worry, regulatory environments. But also, their customers are setting, with every CX revolution we've seen in the past, our customers in financial services set their expectations, not with the experience they have with banks and financial brands, but the experiences they have with those providers outside who are really focusing on their need states. And I'm wondering, how are you seeing that evolution take place?
Yeah, it's exactly what we're seeing. I think the one thing that's really resonating is the fact that when you deploy AI agents across voice, across chat, across whatever channels it is that your customers love to engage with you on, they can be 24/7, and that is something that is huge, especially for global companies. So there's no longer that reliance on 9 to 5 or 9 to 6 customer service operating times in call centers. It's like if I want to work on, if I'm busy and I work all day, I don't have time to ring the bank and talk to them about a mortgage or about a fraudulent activity on my card, etc. I can do that. I can do that at any time through any channel that I want to do it on. So more and more we're seeing that the same way that when it used to be branch banking and then the advent of websites in the 1990s, it became very rare that people would actually go into a bank to speak to someone. And then websites were then replaced by apps. And now we're seeing that we're kind of foreseeing, well, not we, I'd love to say that I'm just trying to sell it, but our co-founders kind of have the vision that the way that you will interact with, be it a bank, be it an airline, be it a retailer, going forward is going to be through an agentic experience. It's no longer going to be, picking up the phone potentially or, on a website. So, we're seeing demand is becoming more and more prevalent. I've only been with Sierra for 6 months, but the fundamental changes that I have seen both in our platform and in the industry in that time is mind-blowing.
That sounds great. And I wonder, maybe one for you, Tom, because thinking about OakNorth, it's one thing maybe to talk about consumer banking, but complex B2B lending, it's multiple actors within a client organization. There could be someone whose name's on the door, but there could be CFOs, other operators involved in making these kinds of transactions happen. And I think they're very relationship-based sorts of scenarios. I'm wondering, as you're looking at this and seeing what's happened in the retail sector, how do you see it applying into your universe?
Yeah, it's a really interesting one. As you say, this is the loans that we're making are very relationship heavy. Like the engagement with the people, it's their personal businesses. These are proven entrepreneurs. But I think as them entrepreneurs that we're engaging with are also building businesses which are heavily reliant on AI and technology, I think they're going to see this need also for them to gain access to funding and information about who they're borrowing from as well. So yeah, I think naturally there's probably a trajectory there. I think it'll probably be slightly slower than the markets for mass consumers, but I think we're on that path.
That's brilliant. Well, look, I think we heard AI's got to work a lot harder. We hold it to a much higher standard. Trust is going to be absolutely critical in where we take it going forward. We can't underestimate how customers are going to want to use it and engage with it. And I think the other thing we saw just in some of the panelists' personal experiences is that we're going to need to meet customers where they are. Not everyone's going to be fully ready to download the Waymo app and go in for the ride. And we're going to have to think about how we help not only customers, but our client organizations, the financial institutions, and the regulators go on that journey together. So please join me in thanking our panelists here. I really enjoyed this. It's really great to see you guys. Thank you very much.